complicated.
Francesco.
I can still only this one. What's in this?
Okay. I thought I'll do this for the ambience of Forex transfer.
I don't have to for that.
Smooth.
Hold
I'm saying this from before. Try to use a hand squeeze. I think we should put this also on the only this one.
So guys, I hope everybody can hear me, and today is another day, another live session, okay? I hope you guys are ready and fired up for the new week. If you guys can hear me, can I see active? Go to the comment section and write active. If you guys can hear me, you can see me properly. Go to the comment section and write active. I need to know if you guys are active. Can you see me? Can you hear me? If yes, go to the comment section and write active. Good. Go to the comment section and write active if you can see me and if you can hear me. Yes. Good. Okay. Send this link to your friends, send it, but we can't see you or your chats. What do you mean by you can't see me on my chat? I mean, why? Can you see me on my, people are, I don't know. Is anybody else complaining about that? Okay, someone say I see you. Okay, so maybe it's from your Mr. Transformation. It's from your device. So very good. Someone said we can see everything today and we can hear you. I love that. To show that this person has been with us since last week when we were trying to figure out the whole live session of the theme. That's good. That's good. So share this video, share the link to your friends, share to everybody. people that know that are trading forex that want to become profitable. If you want to become profitable, share to your friends. Let's break down the chart. Let's analyze. Let's do things. Send this link to your friends. Send it. Spread the link. Let people join. Let's break down the chart. And basically, the reason why I'm doing this is just to help you guys understand the way I see the market. Not like as if I'm a god or something. I'm just here to show you guys, okay, this is what I see, this is what I see. Okay, give you guys my own 2 cents of the market perspective, okay, how I see the market. Now, I'm not saying if I tell you the market is going to buy or it's bullish, that it's a must that you have to accept that. Do you understand my point? So here, what I'm doing here is just, trying to break down and also teach you guys in the process, because how I'm explaining, if you are wise and sensible enough, you can write down things and you can understand you understand how I trade. Do you understand? Because I'm really not gatekeeping anything for anybody. I basically explain everything out here for you guys to understand, because the way you are winning, I'm winning. Do you understand? That's the that's the whole thing behind it. So you guys can see my chart and you guys can see me. I'll start the whole breakdown by 8:05. So I'll give people 3 minutes to join. Send this link to your friends to join. Post it on your WhatsApp link. Post it on your Instagram. Spread it. Okay. Okay, guys. 8:03. Last week was crazy. Last week was basically crazy. We made a lot of money last week. I'm still even holding some position from last week trade. Um, I'm still holding some positions from last week trade. So 8:04. We are still waiting for people to join. And if you can hear me, we have how many people on here? I need each and every one of you to go to the comment section and write active. So if you guys can hear me and you can see me clearly, active. I want you guys to go there and write active. Go to the comment section and write active, so I know that you guys can see me clearly and you guys can hear me properly. Okay? Go to the comment section and write active. I need to see the comment section moving. Can you people hear me? Can you see me? Go to the comment section and write active. So 8:05, guys. So let's start with the chart breakdown. For one, I wish each and every one of you a profitable week ahead. Definitely, even though if it's not a profitable week, I'll make it a profitable week. It must be a profitable week by force, by fire, by force. So basically, we'll be analyzing XAUUSD, GBPUSD. What page you guys want me to analyze? Okay, go to the comments, drop the page you want me to analyze in the comment section. Go to the chat box. What page you want me to analyze? Then, but first, I'm going to analyze XAU and GBPUS. That's for sure, right? That's the two pairs I look at. So go to the comment section, write your pair. Then I'll be analyzing 5 pairs. So let's remove XAU and gold. So give me extra 3 pairs to analyze, guys. Sorry, XAU and GBPUSD. Give me extra 3 pairs to analyze. Someone say gold. Daniel, is your name Daniel? I've seen it. Yes, I'm gonna analyze gold. GBP, GJ, UJ, BTC, EJ. Just go to the comment section and drop the pair you want me to analyze, okay? So for one, let's start with gold. So basically, the way I analyze, right, or the way I look at the market, I look at the market like it's a top-down analysis. That's basically what I do every time. I look at the market from the higher time frame to the lower time frame. Why? Because basically the higher time frame explains a whole lot of details on what I'm going to be doing on the lower time frame. Do you understand? I used to tell my students that the higher time frame is more of like how am I going to say this? It's more of like a guardian. Do you understand? It's more of like a guardian on what on what I'm going to do on the lower time frame, right? So now let's go down to the higher time frame, starting from monthly time frame, right? If you guys have known me for a while, this is how I trade. So starting from the monthly time frame, I look at the month volume. Okay, what's the monthly volume? What's the monthly volume for gold, right? Because now as a trader, you want to flow with the monthly volume. You want to understand where is momentum pushing towards, right? Is this month bullish or is it bearish? Do you understand? So now, if you understand the month volume, how do you understand the month volume? Is by looking at the monthly candle for that particular month that you are in, right? So sorry guys. So the monthly candle for May, right? You can see that the monthly candle for May has a whole lot of bullish. We are still seeing some kind of bullish move, right? So this shows us that what the month of May is significantly bullish on gold. Do you understand? Looking at your monthly candle, it's showing us that all these areas we are seeing here below here, right? All these are wicks, right? All these weeks shows us that when price sold to a certain point. Sorry. So price sold to a certain point. Please tell him I'm in a meeting. So price sold to a certain point, but buyers still push the market up, right? This shows us that what the momentum or the volume for the month of May is bullish. Now, this gives us a what? Knowing that the volume and the momentum of May is bullish on a monthly time frame, this gives you a hint on what to do on the lower time frame, right? Now you understand that okay, on the lower time frame, I shouldn't be looking for anything sells, because I know that the majority of the market is bullish, right? And you either be a fool to know that majority of the market is bullish and you are aiming for bearish. It's just like one person moving against the 1,000 army, right? So now you already understand all this from the higher time frame. So seeing the fact that the monthly time frame is bullish, right? We are seeing a bullish candle. Now we have to go to the lower time frame to understand, okay, now how can we break down that bullish candle we are seeing? Like, how can we take advantage of it? Or how can we take advantage of what we are seeing on that monthly time frame? So basically here we can see that, what we'll be looking for next is to see a particular time frame that gives us structure, right? When I mean structure, this is what I mean: higher lows, higher highs, higher lows, higher highs, higher lows. This is what I mean by structure, right? This is what I mean by structure. We have things like this, and we also have things like this. Because sometimes you see the market move like this. Sometimes you can see the market move like this. This is not structure, right? Before you can say something is structure, it has to give you higher lows, higher highs, or it has to give you lower lows, lower highs. Do you understand? So now we understanding that okay, the monthly candle has a bullish volume. Now what we are looking for is a time frame that gives us a bullish structure. We need to go to a time frame. I want you guys to give me an answer. Are we seeing a clear structure on this weekly time frame? Go to the comment section and drop. Are we seeing a clear structure on this weekly time frame based off of what I just explained now? Can you guys hear me? Guys, we have how many? We have a whole lot of people on here, and I need response. Someone said yes. Daniel said yes. Literally said yes. Ugochi said so. Where you guys can see a clean structure here. Well, you are wrong. You understand? You are wrong. There's no clear structure here. Price is just steep. This is a steep move. Price is not giving you anything like this. Price is not giving you anything like that. Do you understand? This what we are seeing on the weekly time frame. Understand this, right? There is no sign of there is no. I mean, someone. I like the fact that Mr. One. I don't know if you're a girl or a guy. You are understanding what I'm seeing here, right? There is no clear structure on the weekly time frame here. So you can't see higher lows, neither can you see lower highs, right? Now let's go to a more lower time frame. So now on this daily time frame, now can you see structure here? Can you see the difference between this lower time frame? Can you see the difference between this daily time frame and the weekly time frame? Now here we can see things like this. We can see things like this. We can see things like this. I see this is structure. Can you guys see the difference? This is the difference between a weekly time frame and a daily time frame. So now, if you already understand what you saw on the monthly time frame, right? You know the directional bias of the market. Now you go to a time frame where you are seeing structure the most. Now you can, based on the fact that we are seeing that price is giving us higher lows, right? All these areas. So you can tag these areas as higher lows, right? Those areas are higher lows, right? So price is already giving you structure on a daily time frame. So now using your feed from the last higher low, this is what we are trying to look for now is a directional bias, right? We are trying to understand the long-term projection of the market. So point A here, from point A here to point B, this area is our higher high because this was the resistance. So that's where you are marking out your field to HH. When you see HH signifies higher high, while HL signifies higher low. So now we can see that, let me remove this. So we can see that price got to what? 50%, right? And price is heading to our TP. This is our TP area. Do you understand? Price has gotten to 50% and price is moving towards our TP. That's why when most people were saying sell, 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 sell on gold, I was like, I mean, I don't see any sell buyer. I don't see any sell buyers here. Do you understand? I do not see any sell buyers. What I see for sales is a short-term sell. Do you guys get my point? So when price got to the 50%, right? Remember, this was the previous. Let me remove all this. So I'll make it a bit understandable. This was when I was analyzing. So this was our previous resistance that was broken, that was formed, right? This area was a previous resistance that was formed around 3,200. Let me make it a bit thick. So this area was the previous resistance that was formed around 3,240, right? So basically, I marked out this resistance. And I waited to see how price reacted towards that resistance. So you can see when price got to that area, we saw a whole lot of consolidation, right? Price consolidated, 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 but price never broke below that support. Do you understand? So to show that this support area that was formed here was maintained. So the fact that that support area was maintained and also price closed with a body on your 50% area, that gives you a particular indication or sign that price is about to reject or respect or transit from that area. Do you understand? Price is about to transit from that area. Aside from that, that's number one confluence, right? Then the second confluence is how the candlesticks were closing. Observe how these 1, 2, 3 candlesticks were closing. This one closed bearish, right? Then this closed. So this here closed bullish. Then this also here closed what? This closed bearish, but with some bearish exhaustion, right? So observe how the whole candlesticks closed. A whole lot of bearish exhaustion we are seeing here, right? All these things you are seeing here were bearish exhaustion. That is, when I mean bearish exhaustion, that is sellers don't have the momentum or the energy to push down the market again. That is basically they are exhausted. That's what we call a bearish exhaustion, right? So seeing this around our fib level gives us some kind of confidence. Remember, I'm a confidence trader. You get, I trade with a whole lot of confirmation. I need to see confirmation A, confirmation B, confirmation C, add everything up together before I'm able to take a trade. That's why I tell you guys, before you take a trade, there has to be a reason backing up that trade. You don't just see, hey, price has gotten to my POI, bam, you take a trade. No, that's not how it's done. Do you understand? You should understand where price is, why price is reacting towards that area, what could go wrong, or what is the possibility, what is the chance. Do you get what is the reason I'm saying price is going to move from this area? So now we can see that from this particular area, right, price started giving us bullish exhaustion, bullish candle close, right? So now let's break down this particular area on the lower time frame. So I'm going to highlight that point. Let's break it down on the lower time frame, right? Let's go to a 1 hour time frame. So on your lower time frame, right, on your 1 hour time frame, that area formed a what? A double bottom, right? More, I wouldn't call this a double bottom actually. I would just call it something like a counter move, right? This was where price started transitioning from. Price gave us this counter move, right? Price gave us this counter move around here, okay? Then came above here and broke this resistance. Do you understand? It broke above this resistance and it also broke above our moving average. Are you guys seeing the moving average? Let me make it a bit thick. I'm trying to make the moving average a bit thick so you guys will see it properly. So for one, yeah, price, first of all, the transition started from price, from everything started from the higher time frame. Then this is on the lower time frame, right? Price gave us a what? A counter move, which was this, right? Some kind of higher low. Then price also broke above your moving average. Remember, moving average itself as a dynamic support or dynamic resistance. So observe how it was serving as a dynamic resistance throughout this area, right? You can see that price, anytime price is below your moving average, the tendency of it selling is high. Do you understand? There's a high bearish momentum when price is below your moving average. Or now, when price is above your moving average, there is high tendency of buying, right? There is a bullish momentum around that level. You guys get that is the sense behind it. You get that's just like I'm giving you guys a 2% of how to use the moving average. Whenever you see price below your moving average, take more sales, right? Whenever you see price above your moving average, consider that market more bullish than bearish. Do you understand? So now we saw that price first of all gave us what? A counter move. Also came all the way above this area, rejected this first resistance that was created, right? It reacted toward that area, but what did it do? It also gave us a minor support, right? Minor support, which was around here, and that minor support was testing our moving average. Observe, you see that that minor support was testing our moving average, right? So observe the fact that price also went gave us some kind of bullish move, came back again and tested. This is a test, right? Price tested this particular minor resistance support that was created around here. Do you guys understand? Price tested that area, then we saw some kind of bullish variation. 1, 2, 3. From here, price started buying. Do you understand? All these areas are what we call a transitioning phase. Do you get? All these areas we started seeing buys to this area. So from here now, you can start this move. I call this buying move, right? This was it from point A to point B. Let me remove this so it won't confuse you guys. So whenever I'm analyzing, guys, there's a whole lot of things. Like I'm doing a whole lot of things in the market. So maybe my chart is kind of confusing. Sorry about that. Okay. So the way I caught this move, this was my first target. This was my first target, TP1 and TP2. Right? So observe something, right? Observe something. When price rejected our 61.8 around this level, right? Then we started seeing the impulsive move. It got to TP1, then it also got to what? TP2. Do you understand? Price got to TP1 and it got to TP2. Immediately it got to our TP2, right? We saw the rejection again, right? Price gave us some kind of rejection again. So what did we have to do? Then now we have to remodify our fib from another point A here to point B, right? Point A here to point B. Now, price is sitting on a 23.6. Now, I want you guys to understand something. This was the reason price was reacting or price was consolidating towards this area or around this area. Like I told you guys, there's always a reason for everything. Do you understand? There's a reason for everything. So for price to consolidate towards this area or around this area was based on the fact that price was respecting our 23.6. Remember, 23.6% areas are mostly for what? Consolidation. Do you understand? Those areas are mostly for what? Consolidation. So price consolidated, I think for how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, then 16. Price consolidated for 16 good hours. Do you get? So now I know for most of you don't know why price was consolidating around that area. But for me, I already know why price was consolidating around that area because I knew that that area was 23.6. So I was expecting that consolidation. Do you understand? I was expecting that consolidation. So the way I trade, I understand each and every single details in the market. For price to do, if price is doing something, I know why price is doing that thing. Do you understand? That's how I trade. That's why I tell people the way I trade is very different from how other people trade. I don't do SMC. I don't set traps. I don't do this. I don't do that. Do you understand? I understand. Not like I try. I understand each and every single thing that is happening in the market. So why is price consolidating around this area? Okay, this is the reason why price is consolidating around this area. Do you understand? Why is price doing this? This is the reason why price is doing this. That is how I was taught. That's how I understood and I grasped the market. Do you understand? So from here, I basically knew that okay, this was the reason why price was consolidating around this area. But what would I have done around that point, right? Just mark out my support and resistance. Because whenever you get to a consolidating area, what do? You just mark out your support and resistance. So I marked out my support. Price was still trading above our moving average, right? See how our moving average was still pointing above. Price was still trading above the moving average. And secondly, price was giving us a whole lot of rejection around that moving averages to show you that what that point is a very strong point, right? That point is a very strong area. Aside from that, also, we can utilize this. This is a previously exhausted point. You can utilize this, right? So this was a previously formed support area. Do you understand? This area was like a support area, but price gave us some kind of higher high, then came all the way back, then respected that area, reacted towards that area, and still remember that area is our 23.6, right? So basically from this point now, I took a trade from here to here, right? I think that was the trade I took on. Where was this? Guys, I'm coming. I think this was the trade I took on. Oh, sorry. Let's check. Let's go to the community. So I took this trade exactly. This was the trade I took on Friday. Yes, on Friday. So go to the chat forum, or sorry, go to the community, right, and go to Friday move. Go to the Friday, the Friday on Friday, right? That was May 23rd, right? That was the trade I took on May 23rd. You guys saw how I scaled in. So basically, that's how I trade. You get this is how I trade. So I think I made around 5,000. Totally, I made $7,000 because I was in drawdown that day. So I recovered my loss and I also made profit, right? So this was the trade I took on Friday, and this was basically how I took that trade. So my target area is still around this point. This is still my target area. So I'm still bullish on gold, right? I'm still bullish on gold. I'm still totally bullish on gold. Once gold open, I'm looking for buys. I'm looking for buys. Trust me, guys. I'm looking for buys. And I know you guys will ask, why did I take my profit from there? So this is the reason why I took my profit from there. I went back to H4 time frame. I saw the fact that this area was respected previously, right? So observe that price respected this area. This area was a previously formed resistance. Price came all the way here and respected that area. So I was like, okay, do you know what? Let me be very, very conservative here. I don't want to, because it's Friday actually. Just that it's Friday, so I have to take something home. Do you get? I have to take something home. It's Friday, so basically, when price got to this area, I was like, I mean, let me just take my profit and call it a profitable week. Do you understand? And this move was around 420 pips. You get around 420 pips. So there was still enough room for me to scale in and wait for price to get to my original target, which is 3,400. But I mean, I was satisfied, so I didn't take any more trade. I closed out, which I closed out in profit. So if you did not see the trade, go back to the community on May 23rd. That's when I took the trade. You guys can see how I took advantage of this 400 pips I called out. Okay, so I'm still bullish on gold. I hope I have not been talking too much. If you guys are following up, I need you guys to go to the comment section and drop a fire emoji or something, or drop active. Just go there and say active. You are active. I need to know that I am not talking to myself. Go to the chat menu, to the chat box and drop active. I need to know that you guys are active and you guys are understanding each and everything I'm explaining here. Go to the chat box and drop active, okay? I'm not going to continue until I see you guys drop active. So I know that you guys are available. Please, I need to get this. So, okay, good. Good. So I think that's for gold, right? That's for gold. So you guys have seen this is basically how I trade. I try to understand each and every move, what's happening, why is it happening, how can I take advantage of it, how can I not be a part of this? Do you understand? That is basically how I trade. I don't do liquidity and not like I said liquidity doesn't work for you people actually, but I mean if it works, stick to it. But I don't do liquidity. I try and understand each and every price action. Do you get? So let's go to GBP USD. Like that straight. GBP USD. Okay, good. So basically, GBP USD is still the same thing. Very, very easy, very if it's one of my friends, she say very je ne sais quoi. It's very easy, very simple, very straight to the point. From the monthly time frame, everything is bullish. You are not looking for any sales here. As a smart trader, follow the majority, right? Understand what the majority is doing first. That's the number one thing you should know in the market. Where is the majority? What are they doing? Are they buying? Are they selling? And how to understand where the majorities are is you have to be on the higher time frame. You have to be on either the monthly time frame. Just be on the monthly time frame. Do you understand? So you know where is the candle. Is it a bullish candle or is it a bearish candle? So if you go to that monthly time frame and you see that it's a bullish candle, you know that at a particular point in time or at a range of a particular time, the price has been bullish. Do you understand? So now you don't want to be the one army against 5,000 army. The price has been bullish for like, let's say, 30 days in a month, and the price has been bullish for like 15 days or 16 days. Then now you're telling me, oh, you want to sell, you're seeing a sell setup. I mean, you're crazy. Why are you seeing a sell setup? Because it's definitely showing that what the month is bullish. Do you get? So why are you looking for a sell setup? So just make trade when it's easy for you to trade, or make trading easy for you. Do you understand? So basically, on GBP USD, right? On GBP USD, we can see that price is bullish. On your daily time frame, what can we see on the daily time frame? Can somebody tell me what we are seeing on our daily time frame? Can somebody tell me what we are seeing on our daily time frame? What are we seeing on our daily time frame? I need somebody to say it. What are we seeing on this daily time frame? What are we seeing on the daily time frame? Go to the chart menu and tell me what we are seeing on the daily time frame. I need to know that you guys are following up. No. Someone said bullish pressure. No. What are we seeing on the daily time frame? We have a lot of people here. I mean, you guys should clear structure with higher lows. Good. I like this guy. I like this guy. I like this guy. Who is this guy? Please, I think after the break from resistance. No, no, not break from the resistance. No. Someone already said the answer. This is a clear structure. We are seeing a clear structure with higher lows and what? Higher highs. Not a break of structure. We are seeing clear structure. We need to see clear structure before you start trading. Do you understand? The market structure is the market. That's it. You have to understand structure first. Understand before you do anything. You need to understand structure. So now on GBP USD, right? We are seeing a clear structure. We are seeing what? Higher lows around here, higher lows, right? Which is very, very easy. Do you understand? Higher lows, right? Now, what's the next thing? Bring out your fib, draw your fib, point A to point B. You can see that what price is respecting. Price is what is respecting 23.6. That's why price consolidated around this area. You guys can see how price consolidated for days around this area. And I know that most of you didn't know why price was consolidating on GBP USD, right? But it was because price was respecting 23.6. Do you understand? So price respected 23.6 for a whole number of days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I think for 2 weeks. 14, 15, 16, 17. 2 weeks and I think 4 days or 3 days, yes. So you see that price was consolidating around that area because it was what? It was respecting 23.6. And see when it broke out of consolidation. You guys know that whenever price breaks out of consolidation, the way it moves with a whole lot of momentum, right? Because consolidation is basically building momentum for price to push. Do you understand? That's what consolidation is mostly for. It's going to contract and consolidate for days. The longer it consolidates, the more momentum price is going to move at, right? So after price broke out of that consolidation, right? Now see the impulsive move. So this is our target on GBP USD, right? Our target is around here. So this is our projection, right? That target is not like as if we are using this on a daily time or on you are using it like on a daily basis, right? This is a daily, this is like a projection. Now you have an aim, you have a target. That's why I used to tell you guys, when you don't have a target in the market, when you don't know where you are heading towards, you are moving, you are a blind man. Do you get? As a trader, if you don't know where you are moving towards, if you don't know your target, your higher time frame target, you are a blind man. You are just moving without direction. You are just trading for trading's sake because you don't know when price is going to reverse on you. Do you understand? If I am not seeing that price is my main target is what is 36407. If I'm not seeing that, then I'm a blind man. I don't know what I'm heading towards. And I think I made this analysis. I made this analysis since. So guys, I want you guys to go back to the community, right? Go to, what day was this? Go to wait guys, give me a minute. Go to, okay, yes, 19th of May, exactly. You see GBP analysis updates, right? I started analyzing GBP. I started saying that price was going to get to this target from here. Do you understand? That was where I started giving. That was where we basically saw our inverse head and shoulder, right? And I told you guys, inverse head and shoulder basically signifies a what? A bullish reversal, or a bullish, either a bullish continuation or a bullish reversal move, right? That was basically where I started giving that analysis from. Go back to May 19th. I said that price is going to go to 1.30, I think 1.30, 36,400. Do you understand? For reference purposes, go back and you see it. So the price is moving towards that area now. It's not like I'm seeing the future. It's just basic analysis, basic structure, understand the market. Do you understand? Understand the market. So basically, we saw this was the inverse head and shoulder, right? That was formed around here. Where is the fuck is this? Okay, what's this? Okay, good. So this was the inverse head and shoulder that was formed here, right? The left shoulder, then the head, and this was the right shoulder, right? So this was the inverse head and shoulder that was formed around there. Do you understand? Then I told you guys that this inverse head and shoulder signifies a bullish continuation. But if you did not catch from that inverse head and shoulder, then you can still draw a counter trend line, right? And wait for price to break out of that counter trend line. So this was a counter trend line. Do you understand? So now price broke out of this counter trend line and gave us a what? Price broke out of the counter trend line and also gave us some kind of what? Higher lows. Do you understand? To show you that it's easy, like it's easy. You have to understand, you have to grasp the market, like relax, understand, like it's easy. You get? So price gave us another, after the breakout of that counter trend line, price gave us another higher low. So for people that did not catch entries inside of this inverse head and shoulder, right? For people that didn't catch entry around that area, you can also, take entries from after that price has broken out of that counter trend line. So now let's go down to like a 30 minutes time frame. So a 30 minutes time frame now, you can start using your fib from point A, right, to point B. Point A to point B, right? So you can see that price respected 38.2. Price, this is our first target, TP1 area around this level, TP1, and this is your TP2, right? So price go towards TP1. After price got to TP1, we saw some kind of rejection. Price reacted towards that TP1. Reacted. Then we saw another bullish impulsive move, right? Price got to TP2, continued move, its bullish move. Do you understand? Price. So this is our aim. Price. This is where price is coming towards, right? So I'm still bullish on GBP USD. Do you get? I'm still 100% bullish on GBP USD, guys. So anything you are doing on GBP USD, your target, your bullish target should be around 1.36420. So I'm bullish to that target on GBP USD. So what's the next pair? What pair are we analyzing next? What are we analyzing next? Um, I think someone said UJ, right? Okay, good. Let's check on UJ. USJPY, good. Guys, let's do USJPY. Then after that, we'll go to maybe Euro JPY also. So this is Euro JPY, okay? So basically, Euro JPY is what is, sorry, bearish, right? But I think we took advantage of the buying moves because the buying move was a bit, it was kind of drastic, right? So we took advantage of it. So basically, here, all these areas are what lower highs, lower highs, lower highs, lower highs. We took advantage of this buy move on USD JPY. The buy move was around 400, almost 500 pips. We took advantage of it, and when price got this strong resistance, it reacted towards that area, and now it has broken out of our MA, right? So basically, what are we supposed to do to catch moves from here? It's very easy. Draw your counter trend line, right? Price has broken out of the counter trend line. Then what you have to look out for now is what minor higher lows, right? So things like this, you can see minor higher lows like this, things like this. All these areas are minor higher lows. So now let's say you mark out from, let's go to a more higher time frame because I think it's a bit clearer there. Good. So we can see how price is breaking the structures, right? So from point A here to point B, right? This is going to be our target. So this is going to be our target on Euro JPY and US JPY. So write it today. Write it somewhere that Phoenix said that US JPY is going to get to 136.599. I said it, right? So how you see how it moves. Do you understand? So from point A here to our TP1, which is shown on our feed, make sure you are selling. Don't do anything other than sales. Make sure you are what selling. Do you understand? Keep on shorting Euro USD and USD JPY. Keep on shorting USD JPY. Keep on shorting USD JPY. Now, why did I say that? Because the momentum and the majority are shorting. So now, if you are shorting, the tendency or the probability of you winning your trade is high. Do you understand? But if you are going against the market move, or you are going against the market, or you are going against the majority, right? Then the tendency of your trade hitting TP is low. Do you understand? That's the sense in it. If you are moving towards the majority, or you are flowing with the majority, you are flowing with the trend, your TP, like tendency of price getting to your TP is high. But once you are going against the market majority, right, tendency of price moving to your TP is low. You get, so as a wise trader, what do you have to do? You have to flow with where the momentum is. Do you understand? And looking at our moving average on the daily time frame, is serving as a dynamic resistance. Okay, it's serving as a dynamic resistance. So seeing how price broke out of this area, price broke below our moving average on the higher time frame, right? Then it gave a break and retest, we saw some kind of break and retest, then price dropped, then price is trading below our moving average. And what did I say when I was analyzing gold? I said, remember, I said when price is trading below your moving average, it shows you that what the momentum is bearish. Do you understand? So now, I mean, it's easy going. So price has broken our counter trend. So our target is going to be here 136.599. So from where price is to our target, keep on looking for higher lows, because higher low areas are basically entry base points for a bearish market. Do you understand? Let me repeat myself. Sorry, lower highs are entry based points for what? Bearish market. Why higher lows are entry based points for what? Bullish market. Do you understand? So let me explain what I just said now. So basically, if you are seeing this is a bearish market, right? So now these areas are what? Entry based points. These areas are entries. Entry. This is where you should be aiming for your entry, right? This is where these are areas where you should be aiming for entry. Do you understand? These are areas you should be aiming for your entry. You cannot come here and say you somewhere like this area now, you say you want to take entry. This is bad entry. This area is a bad entry point. Do you understand? Areas like this now, these are bad entry points. You need to catch them from the lower highs. Do you understand? So areas like this now, entry, then look for another, maybe something like this now. Then you take your trade from here, price does this again, you take your trade from here. Just use your fib, to understand the market move. Do you understand? Use your fib to understand the market move. Someone said I've been holding, please analyze euro USD. I'm holding a buy from last week. If you're holding a buy, it's not bad, because I think there's a positive correlation between GBP USD and Euro USD. So we already analyzed GBP USD. We can't analyze Euro USD again. It's basically same thing. Just like we are moving around the clock. So I think someone said, what else are we analyzing? Euro JPY. I haven't analyzed that before. Euro JPY. For one, I don't like players that don't have structure. Do you understand? Because what I'm seeing on Euro JPY, I like, what the fuck? What's this? What the hell? What's this? Like, why is it moving sideways? Why are you trading this pair? For God's sake. Who is this? Glory. Why are you trading this pair? It doesn't have structure actually. It's just moving sideways. Okay. For pairs like this, actually, what I'll just do is, let me give you my 2%. So what I'll just do is mark out support and resistance very quickly. Mark out support and resistance very, very quickly, right? So basically now you are trading inside of a range. This is a ranging market. Do you understand? So you should understand that you are trading inside of a range. So when you are trading inside of a range, I swear, what is this? This is a glorious move. So basically, mark out support areas, mark out resistance areas. Now you are trading inside of this point. So go to a lower time frame, because definitely on a lower time frame you have to see structure on a lower time frame, even though the overall time frame is kind of confusing. We can see this. I think let's go to H4. H4 is more better. Okay, so we can see things like this. Okay, for one, we can see things like this. Price has broken out of our counter trend, and also price is now trading below your moving averages, right? That which is fine. average that has broken a a dynamic support area. So it's showing that what price now is bearish. And observe how price did what? Observe how price broke our moving average and has retested that moving average also. Do you understand? Price broke the moving average and retested that moving average. Okay. So what do you have to do around this point? Remember, we're on a lower time frame. You mark out from point A to point B. Around that area, that price respected 38.2, right? And price has gotten to our TP1, which is negative 27%. Price has gotten, we'll be aiming for TP2 with, let me mark this out. Where's this thing? This is our TP1, right? Price has touched our TP1 and TP2, right? So basically, price is still giving you what? Lower highs. Do you understand? Of the range, right? And for price to be respecting all this, we are still bearish. Do you get? So for me actually, I'll basically like to see price react towards this previous resistance area. Sorry, previous support area, more like a support turn resistance. Do you understand? So I'm still like short-term bullish, right? Then bearish. So why do I say this? I need to see price come and at least touch our moving average. It's not, remember, it is not a must. Do you get? It is not a must that price touches that area, but the tendency of price to get into this area is a bit high because there is still a whole lot of imbalance to be filled around this point, right? So we need to see price, or we'll say not imbalance, we'll say gap, or let's just call it an imbalance actually. So we need to see price at least fill up a bit of it, then tap on moving average, then at least give us some extra confidence like a support turn resistance, right? Then from there we could short. Okay, from there we could short. So let's say point A to point B, right? Point A to point B. So we are at least waiting for price to get to either 61.8, close on 61.8, or come around 78.6 and close around that area. Then we'll continue our bearish move. So overall, Mrs. Glory Glory, we are bearish. Or Mr. Glory Glory, I don't know if you're a man or a woman, we are bearish. Just that we are still bearish on this your pair. But trust me, this your pair doesn't have a structure. It's kind of confusing. Okay, but we are still bearish. Okay, we are still bearish and we are still aiming for the sales on this pair. Okay, this is a ranging market. So guys, are you guys enjoying the class? You guys feeling the vibe? Do you guys like this more than the Zoom? Do you guys like this more than the Zoom? Yaya Muhammad. So guys, I think it's 1 hour live stream. It's crazy. 1 hour. I would be ending the live now. Okay, I'll be ending the live now. So if you guys have any questions to ask, go to the chat forum. And remember, guys, we have a beginners class coming up tomorrow. Okay, we have a beginners class coming up tomorrow, guys. So make sure you take advantage of that beginners class. I've been saying this, take advantage of the beginners class. For those that don't know how to trade, if your brother wants to learn how to trade, call your brother, tell your brother that Phoenix is hosting a beginners class. Come and join now, it's for free. Do you understand? If your wicked neighbor or your wicked sibling or anybody wants to learn how to trade, tell them they should come and learn how to trade now. It's for free, guys. Do you understand? By when is the beginners class? Tomorrow. The beginners class is starting tomorrow, guys. The beginners class is starting tomorrow, okay? So basically, we'll be explaining a whole lot for you guys. Explaining a whole lot, the basic things in forex market. The basic things you need to know in the forex market will be explaining a lot of it. You guys understand? So come take advantage of it, and it's not biting you. You're not paying for it. So if you're not paying for it, why don't you take good advantage of it? Okay? As in what time? Okay, it starts by we said let it be 7, because by 7 p.m. people will be back from work. Do you understand? So 7 p.m. ish, yes. 7 p.m. people will be back from work. You can take very good advantage of it. But if we do it, let's say in the afternoon time, a whole lot of people will be at work. So we are considering the 95 people. So by 7 o'clock, you should be home, and you should be home and active for the class. Okay? So I think we are done. What's this? I think we are done, guys, and I'll see you guys. When the market opens. I'll see you guys when the market opens, and we will definitely take advantage of the charts. Okay? So peace out, niggas. Bye. Thanks for joining, and see you guys next week.